This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Okay, here we are on question 3 of the June 2010 F7 exam. The question is deltoid, and it's a cash flow question. Just let's see what we've got here. Prepare a statement of cash flow for deltoid in accordance with state indirect methods. That's normal. Based on the information available, advise the loan provider on matters you would take into consideration when deciding. So I can't do part A2 without having done part A1, but I have already planned an answer to part B for 5 marks. So we'll stick to the allocation. It's 20 marks left for the cash flow. 20 marks then is 36 minutes. And it's 17:24, so 1800 finish time. And that's got to be the cash flow together with the, based on information, advise the loan provider. Okay, cash flows. Always start with PBT. We may have to work out PBT. We don't have to in this case. PBT, we're told, make sure you get the right column. PBT is 1800, but beware, it is a loss. Okay, this is operating activities. Halfway down the page, I'm going to have to move off the screen and give myself some space, but halfway down the page I'm going to have the investing activities. And then about 3/4 of the way down the page I'm going to have financing activities. And then right at the bottom of the page I'm going to have net cash flow for the year. And then cash and equivalents brought forward. And that will give me cash and equivalents carried forward. And that then is going to be my bottom 3 lines. And I can fill those in, because I've got the bank overdraft to carry forward. Just let me check and make sure there are no cash equivalents. Point number 1, no. Point number 2, no. Point number 3, no. Point number 4, no. There are no cash equivalents. So these bottom 2 lines, bank overdraft carried forward is 1.4 negative. Watch out, because he does this every time. The sign will change. 1,500 brought forward was an in-hand balance. We had positive money at the bank. Now we have an overdraft. It must mean we've got 2,900 negative flow for the year. These figures must be right. There are no cash equivalents to worry about. We've just checked through the question. Those figures do not alter. No matter what our cash flow adds up to, those figures do not alter. Okay. Right, so let's go back up and see what we do have. PBT is 1800. Now we can go through this. I'm going to add back the finance cost, because we always do. Add back the finance costs. And that's 1,000. And then that's all which is jumping out at me from page... from the first page 6 of the exam. And then we've got this. During the year, Deltoid sold its leasehold property for 8.5, entered into an arrangement to rent it back from the purchaser. And no additions or disposals of the depreciation charges were. So add back depreciation. And that was 1,700 and 1,800, that's 3,700. We will need that analysis, but we don't need it immediately. Point number 2, there's a bonus issue of shares from share premium, 1 for every 10. Okay, well, this is down in financing. There were shares, there were 8,000, and we've just had 800. Share premium was 4,000, and I've just used 800 of that for this 1 for 10 bonus issue. And this now 8,000, this goes to 10,000 shares, because we told in point number 2 is a fully subscribed issue of shares at par. So that should therefore be 3,200 left in share premium, and there is. So 8,000, it's 1,200 share issue proceeds. Okay, I've just put that in for my working. I'll just cross that out and now put share issue proceeds. And down here we're also going to have possibility of a loan note repayment, but no, it was 5,000 non-current, it's moved to 5,000 current, but there will be finance lease creditor payments. I'm not going to get involved in that because it looks a little bit awkward, so I'm going to leave that one. Point number 3, the 10% loan note is due for repayment on 30th of June, so in 3 months' time. Deltoid is in negotiations with the loan provider to refinance the same amount for another 5 years. Finance costs are made up of lease charges, overdraft interest, loan interest. I don't need to worry about that, I don't think. So now let's go back up and see what else we have got. Property, plant and equipment during the year. No additions or disposals. But we sold this leasehold property for 8.5. So let's have a look at that. Leasehold property was 8.8. And depreciation on that was 200. So at date of sale it was 8.6 and we sold it for 8.5. So we made a loss on sale, loss on disposal of 100. I'm going to cross this out. That would be in my workings, but I can't keep going backwards and forwards up the page. Alright, there were no additions or disposals of plant owned. Lease plant. Lease plant 1800, it was 2.5. Okay, let's look at lease plant, can we? It's gone from 2.5 to 8.5. So we started with 2,500 and we depreciated that by 1,800. So that brings it down to 7. Okay. Then it's gone to 6.5. So I must have bought 5.8 on lease. Okay, so now I need to look at the finance lease creditor. Finance lease creditor was... I had a finance lease creditor brought down of 2,000 long term and 800 short term. Now I've just bought 5,800 on lease and I've got carry down long term 4.8, carry down short term 1.7, and I know that the finance lease charges were 300, so I would owe him that as well. Therefore I must have paid whatever this is, 8,009, 8,009, that's 5, 6,005, 2,400 I must have paid. 2,400 paid. 2,400. I'm going to cross these out. Obviously you can check them up again yourselves, but I cross them out because I need the space, unfortunately. Okay. Now then, what's next? Don't there's much else. Is there much else? Don't think so. There's no loan repayment. Let's see what I've got. Oh, we got the changes in working capital, haven't we? Changes in working capital. Where's my page gone? Changes in working capital. Inventory. Inventory. That's gone from 4.6 to 12.5, which is 7,900. it's an increase and therefore it's an outflow. Receivables has gone by 2,500 and it's an increase, it's an outflow. Tax refund, we've got tax paid. I'm going to have to drop this investing activities down. I've not left myself enough room. Investing activities down here somewhere. So we've got the tax, and we've also got change in payables, haven't we? Change in payables. It's gone from 40 to 47. That's an increase in payables, an inflow. Then we've got tax paid, divs paid, and tax paid, divs paid, and interest paid. Tax paid, I'm going to need a separate working for tax paid. I had a refund due, so I had an asset brought down. That's an asset carried down, sorry. It's an asset carried down, 500. There it is, brought down, so that's why it's an asset at the end of this year. I've got deferred tax. I had a brought down figure of 8 and a carry down figure of 12. And current tax, I had a brought down figure of 2005 and nothing carried forward. And this year I've had a credit to the income statement of 700. So if I balance that off, that's 3008, 1,900 tax paid. I'm going to, if you don't mind, get rid of that now. And then we can work out the interest paid, or dividends paid. Do we have any profit and loss account for the year? Let's just have a look at that profit and loss. Ooh, he's naughty, look at that. We started off with 6,300 and we've got a loss for the year of 1,001. Therefore we expect to finish up with 5,200 on the statement of financial position. But in fact we don't. Look at that, we only finish up with 4,005. Therefore there must have been a dividend of 700. Now that's sneaky. That's a naughty little thing for him to have done. He's not identified it, he's not said anything separate, he's not pointed it out. It's up to you to spot that, but that's naughty of him. But it's all fair in F7. Then we've got the interest paid. Now then, interest paid. There's no liabilities brought forward for interest. There's no liabilities carried forward. So interest paid is just 1,000, according to, what is it, note number 4, interest payment. Okay. Well, investing activities, it's strange that there's nothing in there. There must be. Yes, of course there is. The sale proceeds of the lease plan, of the leasehold property. Sale proceeds of 8,500, note number 1. So that's that. Okay, that's a payment, isn't it? Alright, let's see where we're up to. 4748, 4853. In and going out, we've got 9, 10, 4, 11, 4, 12, 4, 31, 14,000 out, so that's 8,700 out, which gives me a figure. It gives me a figure. Now, I wouldn't write 8,700 on my answer paper. I'm going to put it over there. Alright, I'm just going to put 8,700 over here. And that's on my question paper. So I've got, start off with 1,800 negative, 8,000, this is on my question paper, 10,500 negative. I've got 8,500 positive, that gives me a 2,000 negative. And I've got 1,200 negative, That gives me 3,200 negative. And I'm looking for 2009, so negative. So I'm 300 out somewhere. So that's why I'm not putting these figures in here. Because the marker will be so used to seeing the right figures that if I put the wrong one in, it's going to be obvious for him. So let me see what we've got. That I'm happy with, that I'm happy with, that I'm happy with, and these three I'm happy with. Yes, yes, and yes, I'm happy with all of these figures. Sale proceeds I'm happy with. So it's down in financing, and share issue I'm happy with. I must be wrong, I've got to be wrong with the finance lease creditor payment. So let me have another look at finance lease creditors. Finance lease creditors. I've got brought down figure, I've got a long-term liability brought down of 2,000 and a long-term liability carried down of 4,008. I've got a short-term brought down of 800 and a short-term carried down of 1,007. Okay. I've got depreciation, or not depreciation on lease plant. What have I got? What have I got? During the year there were no identity. Sold its lease, enter into release it back, rent it back from the purchaser. I've got carried down plant, leased plant. Brought down of 2.5, carried down of 6.5, and I depreciated it by 1.8. Therefore I must have bought 8.3, 5,008, unless I've forgotten something. So I must have bought 5,008, 2565, depreciated the 2.5 by 1.8. Yeah, so 5,008 is the addition to that, which then gives me 8,600, 8,600, therefore paid 6,000 or 2,100, and the reason I've got 2,004 is because I included the 300 interest in the finance lease charges, but of course 300 is not included in these figures. The interest is separately dealt with as a finance charge and is not shown within the finance lease creditor account. So 2,100. Now then, that gives me therefore, that becomes 900. That gives me 2,900 negative, and that's what my figure is here. So I can then put these figures in. So 8,007 gives me 10,500 negative. 8,500 positive gives me 2,000 negative. 900 negative gives me 2,009, and that's the cash flow statement. Now then, what does the question ask me to do? Based on the information available, I've now got to advise the loan provider on matters I would take into consideration when deciding whether to grant a renewal of maturing loan note. Okay. Well, I'm looking at the income statement now. Last year's income statement on finance costs. I had a loan note interest last year of 500, and I had profit before loan note interest. I started with 15, less the 6 operating, that's 9. So profit before any interest, and even if I take the loan note interest off, 8,009, the finance lease interest, and I'm only paying 500 loan interest. This is last year. This year's equivalent figures are desperate, 11,200 and 12,000. I'm making a loss of 0.8 already before I take off any of the lease charges and overdraft interest, which is another 500 coming off. I've got 1.3 negative before I start looking at my loan notes. So I'm actually negative cover. negative loan interest cover. So that's not good news. I've also got an overdraft now. I've got a 1.4 overdraft, and I've got 19 million's worth of PPE. So that's not so bad. But I wonder what the loan note, you see the loan note's up for renewal, and I've also got finance lease obligations. So although I've got all this plant and equipment, it's not actually mine, it's the finance lessor's. I've got 6,500 of that's going to disappear straight away. It gives me 12,500 left. So there's a possibility that might be comforting, but it then depends on whether that's been pledged at all. The bank is not a happy position. The current position, let's see what the current position is. Current assets of 17,005 current assets, or 5,000 without the inventory, and that compares to my current liabilities of 12,800. So although the current ratio is not so bad, it's about 1.4 to 1, quick ratio is desperate. It's negative, it's about 0.4 to 1, and that's not good. These loan creditors, where are we going to get the money from to finance that? Well, nowhere actually. Got 12,500 inventory. It's taking us the best part of 4 months to get rid of our inventory. Cost of sales is 43.8, and I've got inventory of 12.5. So it's taken me the best part of 4 months to get rid of that inventory. Last year it was substantially quicker. It was only 2 months. Last year it was 25,000 cost of sales and 4.6. And so it looks like my inventory is not so clever. I've more than doubled inventory, but revenue has only gone up by, 15 on 40, by less than 40%. It's gone up by 15 on 40. That's 30-something percent, 37%. So that's not so good either. I've managed to make a share issue, but I'm surprised that my shareholders actually accepted it. And I'm paying dividends. This is a little bit strange. I'm paying a dividend this year out of last year's earnings. This year I've made a loss. I made a loss of 1.1, and yet I'm paying a 700 dividend. It just seemed very strange, maybe a little bit naive of the directors to do that. Based on information available, I advise the loan provider on the matters you take into consideration when deciding whether to grant Deltoid a renewal of its maturing loan note. Well, if I were being really brutal, I'd say no. I'm presumably going to get my 5,000 on the basis that we do have net assets. We've got 17,000 net assets, and therefore I'm going to get my 5,000 back on the basis that presumably these assets of 36,500 can be disposed of for an amount in excess of 18,008. And if they sell them, get rid of these assets for an amount in excess of 18,008, then the shareholders will get some money back. But I'm not bothered about that, I just want my 5,000. Yeah. Note number 3, it's due for repayment. It doesn't say whether the loan note is secured or not. If it was secured, then maybe I would, on the basis that property, plant and equipment, even taking away the finance lease obligations of 6,500, property, plant and equipment is still itself worth 12,500. And if I could secure my loan against the property, plant and equipment which the company owns, then maybe I would be inclined to lend it. They've got owned plant of that 12,500. But it's the ability and the question of whether the company is a going concern. It made 5,600 profit last year after tax. This year it's made a loss of 1.1. And I have to query whether the products that Deltoid manufactures and sells, whether they're still in fashion or they're still in demand. It Doesn't immediately look like they are. But that would be the basis of my advice. Let's see where we're up to in terms of time. This is an 1800 finish and it's 1748. Again, we should be able to make a fair effort at that.